Good morning, everybody. My name is Marc von Grundherr. I'm based in London. I know it's 11 o'clock or in UK time and 12 o'clock in South Africa, but we are going to start in a couple of minutes because there's still quite a few people joining. So I don't want anybody to miss any of the exciting things we've got to say. So I hope it's okay and you can just bear with us for literally 1 or 2 more minutes while the rest of the people join. Thank you very much. Well, again, it's Marc von Grundherr again, and a few more people have joined, so that's great. I think we're going to start now, and then for the next hour, talk all things London property. So thank you very much for joining our webinar today. As I said, my name's Marc von Grundherr. I'm a director of Benham & Reeves, and I'm based in London. And I'm joined by Amina, who runs our South Africa office. And today we're holding an exclusive session for South African investors, during which we're going to explore the intricacies of the London property market and how to maximize the return from this, frankly, safe haven investment. I'm going to start myself with a focus on why London, and then I'm going to give some tips to help you make the most money. And after I've finished, as I said, Amina is going to join and explain how we at Benham & Reeves can help you avoid the pitfalls and make as much money as possible in a safe environment. And then at the end, we'll both join again and we'll happy to answer any questions you've got, property related, of course. So use the function at the bottom of the screen, the Q&A function, and feel free to ask any questions. So I'm going to begin now. And there's no doubt that we're living in unprecedented times. Investors from around the world are desperate to find a safe haven for their money. And one of the key places is property. And property has historically been and continues to be a much more rewarding investment than the typical alternatives. It's tangible and people will always need a home. And on top of that, London has always been the world's safe haven. Historically, whenever there's been any form of crisis, people have flocked to London. And that's really the same today. And the main reason for that is that unlike so many other places in the world, investing in London is open to everyone. And so the key question that we get asked a lot, and I think is useful today, is why London specifically? Well, the answer for me, because I work and I live here, it's obvious. London's been a sanctuary. It's survived recessions, terrorism, the financial crisis, and it will survive the pandemic. It's a powerful media, business, and cultural hub with a skilled and dynamic workforce, arguably the world's strongest financial services sector. And it's a key global center for education. UK law is known throughout the world for its openness, transparency, and fairness. London also has a time zone advantage to work with investors both in the East and in the West. So from everywhere, we're right in the center. This cosmopolitan global city remains in the top places in the world to do business. So pause for a minute and look at the long-term picture. According to the Office for National Statistics in the UK, the average London house price in 1991 was just over £70,000. I mean, if you go further back on the graph, you can see it was a lot lower. So if you look at the last 3 decades, at the end of 2021, the average price was almost £520,000. That's an 86% increase in just 10 years. That's 298% over 20 years. And if you go all the way back 30 years, it's an eye-watering 600% increase in value. The figures here, they tell a story. Even in the most politically and economically difficult of times, London property remains a valued and appreciating investment class. London is an extremely resilient city, and no more now, so than now, as the London property market is underpinned by strong fundamentals. I always say London property is a bulletproof investment, considered as one of the world's most trusted assets, with its ability to deliver a regular income and long-term capital growth, especially during times of wider uncertainty. UK house prices rose at a faster rate last year than in any year since 2004. And in fact, according to the Halifax, which incidentally is the largest lender in the UK, 2 years on from the start of the pandemic, average property prices have now risen by £38,709. That's 16% increase since February 2020. And over the last 12 months alone, house prices have gained on average over £27,000. This is the biggest one-year cash rise recorded in over 39 years of the index history. So for South African residents, buying in London creates an additional opportunity. It allows you to invest away from your local South African market. Any banker's going to tell you diversification is the cornerstone of any good investment portfolio. The cost of borrowing is still very low, with Bank of England base rate at still 0.75%. And even a marginal further rate increase is likely to dent the appetite for home ownership in the UK. And with cash actually losing value in real terms, in my opinion, there's only one place for it, and that's frankly London property. But it's still really important to target your investment. Apart from price and location, which of course are both very important, you need to consider the yield you're going to get, the potential for capital growth, whether it's in a regeneration area, and finally, the reputation and track record of the developer. Our role at Benham & Reeves is to help you make the most money possible by maximizing the return on your investment, which includes saving your valuable time too. So now let me show you a few examples of how property has performed, showing you the returns we've achieved for our clients in recent terms. So, the first property that I've got here was in Notting Hill in the centre of London. It was a one-bedroom flat. Purchase price was £460,000 in 2014. Today, its current value is about £630,000. The average rent is £26,500. That gives you a gross yield of 5.76%, which is pretty strong. And the interesting thing is, in terms of your return on investment, without finance and you paid cash, your return on your cash would be 36.9% over that 8-year period. However, with finance at 70%, which is easily doable for most investors, your cash investment would have only been £138,000. So that gets you a return on your cash of 123%. And the next property that we've got here is in Tooting, southwest London. So I think you'll see that I've got one in the centre, then one in the south, and I'm going to do some others in different parts of London, just to show you how well each part has done. So again, it's a one-bedroom flat. The purchase price in 2015, that's 7 years ago, was £320,000. Its value today is about £475,000, with a rental yield we're receiving now of £18,660. That's just shy of a 6% gross yield. Just think about what you're getting in the bank on your money. Nowhere near 6%. And in terms of what you've done for your capital gain, which is the very important part of any investment strategy, well, if you paid cash, your return on your cash would still be a very respectable 48% or just over that. But if you got finance at 70%, so only put in just under £100,000, your return on that cash investment today will be 161%, which is pretty amazing. So turning to the next one, it's in the east of London in Stratford that many people know was redeveloped. You know, lots of things have been happening here. So looking at the property we've got, it's a 2-bedroom flat that we acquired for a client. Again, it was 2015. We paid £365,000. The rent that we're receiving now is £23,400. It gives a gross yield of 6.4%. You know, that's pretty amazing. I keep saying it, but over 6% yield is very strong. But it's the capital gain that really interests us all, because the income is nice, but it's the capital gain that you are growing your wealth. You know, where you paid cash of £365,000, your return is a very, very, very impressive 60%. However, let's supercharge it with finance at 70%. You only put in just over £100,000, 200% return on your money. That's pretty amazing in any investor's book as we see it. So turning to the next property, and that's in Ealing, which is in West London. I've looked at different types of properties. You can see 1 beds, 2 beds. And this was a studio, which is 1 room with a kitchen and a bathroom. Purchase price was 10 years ago at £280,000. Well, the current value is £450,000. So current rent, £15,600, is still giving over 5.5% yield. Look at the capital gain. You know, if you paid cash, you'd have got 60% uplift in value. That's pretty good. But again, with finance, where you only had to put down £84,000, today you'd have seen over 200% increase. And let's just see, I think you can see the way this story is going. We're going to look at the last one, which is in North London. So I've done Notting Hill in the centre, Tooting in the southwest, Stratford in the east, Ealing in the west, and Colindale, northwest London, a development called Beaufort Park that's by a very good developer. It was a 2-bedroom apartment. The purchase price, you know, this is 14 years ago. So it should have made money by everybody's reckoning, but let's see how well it did. Invested £250,000, that was the purchase price. Current value today, £450,000. The annual rent today is £20,600, which gives you a gross yield of 8.25%, which is, you know, that's amazing compared with what you'd have had if you'd stuck the money in the bank all that time. Without finance, your return is amazing, 80% return over that 14-year period. But with 70% finance, where you only put in £75,000, your return on your cash would have been 266%, which is just incredible. And I think you can see here the story. These are not our best examples. I didn't just pick out the ones that made everybody a lot of money. I picked an average from different parts of London in order to give you a guide onto what's possible and what people have been doing by investing in London. You know, but the key thing here is that these clients have done very well by investing in the right property, in the right area, with the key local knowledge. And of course, you know, very importantly, and I'm not just selling our services, using the right independent agent. You know, and I think you'll agree the returns here have been pretty spectacular. So I hope that was really helpful. And so now I'm going to hand over to the fabulous head of our South Africa office, Amina, who's going to take you through how Benham & Reeves can help you make money in this market. And then when Amina's finished, as I said at the beginning, we're going to answer any questions that you want to leave. Please keep adding them in the Q&A function. I've got some questions that were asked before the event that I'll go through. But now it's over to you, Amina. Thank you very much.
Thanks, Mark. Thanks. Buying a London property can be the opportunity of a lifetime. The keys are clear thinking, meticulous planning, on-the-ground knowledge, and a trusted independent partner. Honestly, the most important of these is having someone independent you can trust and rely on. Someone who will hold your hand and guide you through the process, avoiding pitfalls along the way. It's also absolutely crucial to be ready. And by that, I mean having everything in place so that you can pounce the moment you find that right opportunity. That not only means working out your budget, but also ensuring your finances are sorted out early. But what is opportunity? Well, this is where it's essential to maintain a degree of perspective. Remember, if you're buying as an investment, this will not only be your home, it will be a home for someone else to rent. And so the key to consider is who they are, what they might want, and what they'll pay for. Please remember that you buy a property with two goals in mind. Capital appreciation on one hand. Don't buy a property that you want to sell within 5 years. A flipping strategy is very dangerous. There might be fast recovery, but I always recommend a long-term view. And don't forget the other goal, rental yield. With 1/3 of London households currently renting, 60% are expected to rent by 2025. Supply of rental stock is unable to keep up with demand, making rental yields 4 to 5% very achievable. So now turning to the all-important question, where and what to buy? There are 32 London boroughs. London is very diverse. So the enormous capital growth in the center has left yields very low. But if you look a little further out, where prices are more affordable, yields are much higher. In fact, in this map, it shows price growth in the different boroughs over the last 20 years. In recent years, areas on the outer fringes in zone 3, 4, and 5 have outpaced growth in prime London postcodes. As Londoners increasingly seek homes with more space on lower budgets. Although every investor has different requirements, it's our job to help you find a property that frankly I'd invest in myself. And that means ticking a number of boxes: affordability, excellent transport links, green spaces, close to schools and centers of further education, and by a reputable developer. Traditionally, estate agents, they work for a developer or vendor selling a property, and once they have made their commission, they disappear. We, on the other hand, are there from start to finish. Once you find a property you want to buy, we help you. We help you furnish the property, market the property, negotiate with tenants, manage it to the future. The better the return on your investment, the better the relationship with us. And we have 60 years of experience in the London market and 19 branches. We were the first 25 years ago to open offices for clients in Hong Kong, Malaysia, Shanghai, India, Dubai, and now in South Africa. We offer a full one-stop service: investment advice, what to buy, where to buy, handover and snaggings, furnishings and refurbishment, lettings, property management, and even filing your tax returns. Most importantly of all, never in London's many centuries of history has there been a crisis from which markets and house prices have not bounced back. At Benham and Reeves, we are optimistic, because this is a market with sound long-term fundamentals. Investors always look for ways to hedge against uncertainty by investing in assets which have historically been able to deliver stable returns and quick recoveries. This surge in demand for London shows how it's seen as a safe and secure asset in times of uncertainty across the globe. I just want to quickly add, Mark and our MD Anita will be visiting South Africa in May for an exclusive investors event in Johannesburg, the 6th of May, Cape Town the 8th, and Durban the 12th. If you want to register for these events, sign up using the QR code on your screen. I'll hand over to you, Mark, for the Q&A sessions to keep those questions coming.
That's great. Thank you, Amina. That's very interesting. And obviously, it's good to hear everything. You know, I hear South Africa's very busy, and we've certainly had a lot of people interested from South Africa. And I had quite a lot of questions before the event. And so I think it's quite useful. As I said, if any of you've got any questions you want to add, just keep asking them, and we'll try to get round to as many as we can. So the first one that I saw was from a lady. She's obviously based in Johannesburg. She said, I'm based in Joburg. I'm wondering how easy can I get a loan and what are the rates like? So do you want to take that, Amina? How easy is it for someone to get a loan?
Yes, Mark. It's actually quite easy to get a loan. We utilize Capricorn Finance. They specialize in helping overseas investors like us. They give South Africans a 65% mortgage at an interest rate of between 3.5 and 4%.
Okay, no, that's quite interesting. And it's quite easy. I think the process is quite easy, right? Do you know what kind of information they need? I think they need basic stuff, don't they?
Yes, it's just basic stuff. They need your bank statements. If you're buying a property in your company, they need your company documents. And you need to have a good credit record.
Sure, and it's okay still if you have people that are self-employed as well. I think it's just as easy to get a loan if you're self-employed. I think that's really important because I think a lot of people are in South Africa are self-employed, so I think that's good. Do you know? I mean, interesting enough, do you know what the rates are like? Because I heard the rates are anywhere from 3% or something like that, aren't they?
Yes, so they are from 3.5 to 4%. It depends on your credit score and your portfolio. So it's between 3.5 and 4%.
Yeah, I heard that. I think, you know, it depends what your profile is. So, I mean, there are a couple of lenders that I know that do an awful lot for South Africans, and one's called Neat House, another one's called Alia United. A couple of those banks, they do a lot. But they take that little bit longer, and on average, it's taking anywhere, 6 to 10 weeks to process things. So that's obviously an important factor to take into account when you're looking for a property, I think, because the length of time it takes to get your loan, if you want to know you're going to qualify, to identify the right property is important. But I think it's also important to have your finance ready. So, if you're thinking about buying, I'm sure Amina agrees, it's good to come and speak to us and let us make sure that you can get the amount of loan you want. Standard Chartered, they're very big in Africa. They do an awful lot of loans for South Africans and generally people in Africa. But again, you need to speak to them before and just find out what their criteria are, because for everybody, it's slightly different. So I think that's really important. The next question was, when are the best times to buy a property? When's the best time to buy? Amina, do you want to I don't know whether you have a best time to buy a property, but that's, people are interested in that.
I think now is a good time to buy because the interest rates are fair. The interest rates are fair at the moment, 3.5 to 4%, and it might, as our countries stabilize, the economy is getting better, and the interest rates might increase. Yeah,
no, I agree that. I think we all think interest rates will increase a bit. Yes. I mean, that's going to happen. It's happened already. It's going to continue. But remember, the margins will not, the rates won't increase at the same amount. So I think marginal increase. And given the fact, if you borrow 60% or maximum 70%, the income that you're receiving in rent will easily cover interest part. So, I mean, I think it's pretty safe to say that it's good. In terms of best time, my view on best time to buy, yeah, I think it's a good time now. I think with COVID, and even though we've seen price rises, which I talked about over the last year, I think it's a good time because those prices are still, in certain pockets, you can still get relatively good value and good deals, you know, whether that's through developers or secondhand. But it's really important that, you know, when's the best time to buy, it's when it's right for you. So, you know, we always want to buy when it's cheapest and sell when it's most expensive, but you have to be ready in yourself. And so I always say to everybody that asks me, should I buy now? Should I buy now? Do you have the money ready? Do you want to do it now? Or are you committed elsewhere? And if you have the money ready and you want to do it now, now is as good a time as any. You know, I buy when I've got enough savings together and I've built up enough, and then I start looking for that right opportunity. And that is the time that it's right for you to buy. You know, even people that bought at the top of the boom, they've still made money today and they've had income throughout the whole of it. So it's good to buy now. But as I said, given what happens with finance and the times things take, just get yourself ready and come and chat with, you know, as Amina said, myself and my co-director, Anita Mera, we're going to be in Johannesburg, Cape Town and Durban in May with Amina. Please come and meet us or speak to Amina, and we can help you, guide you on what you can afford to buy and options for you. So another good question is, what are the in places to buy right now? You know, where should I buy? Are there any hot spots? Or, you know, should I buy in central London or further out? Amina, do you want to take that? I don't know, what does South Africans, the ones you've dealt with, look to buy at the moment?
So most of my South Africans choose to buy where there's a high rental yield. So at the moment, Hayes Village is offering a 6% rental yield.
Wow.
Yes, so we would sell a lot there. So where the rental yield is high, that's where we sell a lot.
Yeah, and that's slightly further out. So it's not in the center of London because, you know, I think one of the things that people think that the yields are quite low in London compared to other places around the world. But, you know, you do get capital gain, which I showed you in the examples. And I think that buying not in the prime center, unless you want a trophy asset, if you're interested in a high yield, like Amina said, a lot of her clients are looking for high yields, then you should go slightly further out, zone 3, zone 4, zone 5 even, you know, where Hayes Village is. It's on the outskirts and, you know, it's still on the tube network and it's still easily transportable, but you go to places that are slightly outside the main center and you get a good, you know, you get a good yield and you have the same opportunity for capital growth. And there are lots of opportunities there as well, aren't there, Amina?
Yes.
There are discounts, small discounts around.
Yes, so most of my South Africans, they want properties with good rental yields and that works for them.
Yeah, okay, good. And in terms of inner or outer London, I think for everybody, you should really be trying to focus on London, even if you go to the further zones out. I think that would be my advice. Another question that we get asked, and you know, we have quite a lot of South African clients that have historically owned, and they own in lots of different parts. Some own in the center, some own further out. But a question a lot of people ask is, should I buy new off plan or should I buy second hand? Amina?
I advise most of my clients to buy new developments.
Okay. Why would you say that?
Because we offer good deals.
Okay.
And we can negotiate discounts and they come fully furnished and it's easily rented out.
Yeah, that's true. That's true.
Because most of my clients, when we do a review, they request new developments.
Yeah, and I think
that's why I advise that.
No, I think you're right. I think new developments is the way to go. It does rent very easily. And of course, the payment plan is quite helpful as well, right, Amina? So for example, Hayes Village, how does the payment plan work?
So we do a 1,000 pound deposit, and after 30 days, you pay 10%, and only on completion do you pay for the property. So it gives the person time.
Yeah, and what's the kind of length of time usually if you're buying new off plan? What kind of time does it normally leave you with?
Each development is different, but most of the developments that I sell 6 to 8 months, and some of them up to a year.
Okay, not longer than a year?
It could be longer than a year.
Okay.
Each development is different.
Okay. No, and I agree with that. I think, you know, we see some developments that are 3 years off. So, you know, and a lot of people don't like that. But if you're an investor, what difference does it make if it's 3 years off? You know, the developer here, because we're very careful with the developers we work with, we know they're going to complete. So actually, if something completes in 3 years, it's still pretty good. The other thing about new versus old, and one of the things that people don't take into account, if you buy brand new and you're from the developer, it comes with a warranty. If you buy secondhand, the onus is on you. Once you've bought it, you've got what you've bought. So I'm not saying we wouldn't protect you if that's your course of action. If you want to buy a period property or want it in a certain area, you can't get new build or whatever the reason is, but you have to do your checks before. But number one, you buy it and it is what it is, and there's not going to be anybody coming around to fix it. Well, certainly not the seller won't. Is secondly, there will be more maintenance. Generally, older properties cost more in terms of the ongoing maintenance. With a new build, you'll have no problems for years, and everything will be new. And as Amina says, they rent very well, new build. Oh, period properties rent well too, but new build rent very well because today's tenants want to be near, you know, want to have facilities like a concierge, and some of them have gym, and there are other facilities, and as well as being close to transport. So I'm conscious that we've been going for 35 minutes. So we're going to answer a couple more questions, and then we'll leave you. And then, you know, as I said, you can come back and meet us. So one question that a couple of people asked is, do I need to come to London to actually buy a property? Amina, how does it work? What's the process? And do I need to come here?
No, so the last few properties that we've sold, most of my clients are buying the properties. They just see the video, they're happy. Some of them send family members to view the properties, and they sign the offer to purchase, and they give it to Benham and Reeves to manage.
Okay.
And some of our clients haven't even seen their properties, and they get their rentals every month.
Okay. And they don't, but the truth is they don't need to come to London to do everything. There's no need.
No.
What about money restrictions? Is that a problem for South Africans?
So there's no money restrictions as long as you can prove where you've got your money from.
And you can transfer it from your bank in South Africa straight to your lawyers in the UK?
Yes, there's no issues. As long as you pass the money law and AML, you have the AML documents, and you can show us where the money comes from. Okay,
which is really important. AML is really important. And here the lawyers will check everything anyway. But you don't have to come here. Everything's done electronically. You will need certified copies of your passports and IDs, and the banks will need information as well. But you don't need to come. You can rely on us, or you can come and we'll show it to you, but you don't need to unless you want to. But there's no restriction on what the situation between tax on income between South Africa and the UK. What's that like, Amina?
So at the moment, there's no restrictions. There's no restrictions on buying property in the UK.
Okay. But what about taxes? If you receive rental income in the UK, do you have to pay tax in South Africa on it, or pay tax on the capital gain, or do you not need to?
You need to pay capital gains tax in the UK.
Right, but not in South Africa.
No, not in South Africa.
Okay, fine. And okay, and that's interesting, because here there are some taxes, but at the end of the day, the thing you've got to bear in mind, there are taxes. Unfortunately, it's unavoidable, but you're only paying tax on your profit. So you can allow
on
for
the capital
all your
gain.
expenses. And on the income, and you can allow for all of your expenses. Everything it's cost you to relating to the property, you can offset. So you only pay the net gain on your, the tax on your net gain. So I think that's really important. One question that's asked, I don't know if you, I mean, I can help answer this, is how long does it usually take to let a property? So Amina, do you know, or do you want me to take that? How long it takes to let a property in London when I complete?
From what I understand, Benham and Reeves have a list. So between 2, 3, or 4 weeks.
Yeah, generally speaking. Exactly.
It depends on the property.
Exactly. There's very, very, very strong tenant demand at the moment. So it generally only takes you maximum 2 weeks to find a tenant. And that gives you time to get the furniture in and get the flat ready and do all of that. So it's very quick. The other question, I mean, I think that question's how quick, you know, is it going to stay vacant for? And in between tenancies, the market in London at the moment is so red hot that I cannot tell you. I have never, in the 25 years I've been working in property in London, have I ever seen a market where there is literally nothing for rental. There are a few bits and people are fighting over it. It is the busiest rental market. I heard someone say yesterday in a talk, I joined a meeting with someone from the FT, and they were saying London at the moment is the global hottest property market for tenants on the planet. There's so many people chasing flats that literally anything you rent, anything you own will rent, and rent quickly at a good rent. So the void rates are so low. You know, people tell me, you know, terrible stories about other countries where they own a property and they have to wait 6 months to find a tenant. I mean, that's terrible. That's not an investment market. That's pointless. Whereas here, if vacant, you rent it. You know, it's the biggest problem we have with a lot of
property laws and the entrenched property laws, which protects the landlords.
Yeah,
I was very impressed with that.
Yep. The laws really protect landlords here. So if a tenant doesn't pay, it takes a little time, because obviously everybody's fair in the UK, but it's your property. You get a court date, you go to court, and they will throw the tenant out. So that's a non-paying tenant or a tenant you want to leave. But yeah, the laws are very strict and protect owners. That's why people love it, because the law won't be changed here. We're not living in a place where the government will change laws to take properties away. So you're very protected. And it's as I said, it's a very strong market for rental at the moment. So I think that's all the questions that we've had. As Amina and I said, myself and my co-director Anita will be in Johannesburg, then Cape Town, then Durban, beginning of May. So if you'd like to come and meet us to discuss buying in London, investing in London, or anything to do with the property market, feel free to come and meet us, or get in touch with Amina now. She'd love to help you. So thank you very much for joining, and thank you for all the questions, and have a lovely afternoon. Thank you very much.
Thank you very much.
Thank you.